question a lot of people are asking is whether the collapse of Silicon Valley Bank will have a ripple effect on the economy.
And there are questions about what the Federal Reserve will do next. And so joining us now is Rodney Ramcharan, professor of finance and business economics at USC Marshall School of Business, to talk about it all with us today. Professor, thank you so much for joining us. And I know you could go way over our heads on this one, but we wanted to get some details from you. Can you explain as succinctly as possible what happened to Silicon Valley Bank?
So I think it's important to emphasize that this is not the crisis of '08 and '09. So in this particular case, with this particular bank, it was very exposed to the interest rate increases that the Fed has put in place in the last year or so. So just as briefly as possible, this bank was getting a lot of deposits from folks in the tech space, and it was investing these assets, or investing the deposits in treasury bonds. And it was investing in longer term treasury bonds. And as the Fed began to raise rates, typically bond prices begin to fall. So it invested in low yielding treasury bonds, and those prices fell. And what transpired is the depositors typically began to withdraw some funds, and the bank was forced to sell these assets at a loss. And as the bank began to build up these kinds of losses, the other depositors also began to see or begin to question the solvency of the bank. And then they also flocked and began to take their funds out, forcing the bank to sell more of these assets. And again, it's selling safe assets, but it's selling them at a loss because the value of the assets has gone down because of the interest rate increases that the Fed has put in place in the last year or so. So that's a simple, I think just to contrast this is not the case of the subprime crisis in 2008, where banks were investing in unsafe assets. It's not that case.
Well, thank goodness for that, because a lot's fresh in a lot of people's memories, even if it was a while ago. Let's talk about First Republic Bank. That's a well-known bank here in LA. And what would you tell their customers? Should they be worried, or how would you ease their fears?
So I think the government and the Fed has almost issued a blanket statement. So the deposits are safe. The government has signaled, as in the case of SVB, that smaller banks, if they were to get into trouble, the government is prepared to bail these banks, not bail them out, but to bail the depositors out, even those with deposits in excess of the $250,000 maximum. So just to be clear again, if your deposits are less than $250,000, you are automatically insured by the FDIC. The issue becomes if your deposits are in excess of that number, and the government today has signaled that it's prepared to insure all of these deposits, including those above the 250K maximum number.
Yeah, that's a relief to a lot of people. All this chaos is expected to impact whether the Fed will raise interest rates again next week. So what do you think the Federal Reserve and the Biden administration will do to address what appears to be going on here?
So I think the bond market today seemed to have taken the view that the Fed will slow the pace at which it's going to raise rates. It's difficult to forecast exactly what the Fed will do. But the one thing that we can say is that the likelihood of a 50 basis point hike on Wednesday has gone down a great deal. Exactly what the likelihood is, I can't say, but it's unlikely that we'll see a 50 basis point hike on Wednesday of next week.
A lot of folks will see that as perhaps good news, but all right. Rodney Ramcharan, professor of finance and business economics at USC Marshall School of Business. Thank you so much for talking to us today, and we hope to talk to you again soon.
Thank you.
Hello, I'm Mark Brown. Get more great ABC7 content by clicking the subscribe button for our YouTube channel, and download the ABC7 Los Angeles streaming app on Fire TV, Android TV, Apple TV, and Roku to watch on your TV.